Last 2 years haven't been that easy, of course, for the private equity industry. Investments and funds raised fell significantly as the economy took a nosedive and the money markets dried up. But are there better times ahead? Joining us is Marko Maslakovic, a senior manager of the economic research team at the Citi UK. Marko, nice to see you. Thanks very much indeed for joining us. Global private equity investments down 50% in 2009. What's the first half of this year been like?
Well, there are encouraging signs so far this year. In the first 6 months of this year, investment activity increased by about 1/5 on the same period last year.
But from a low base, though, presumably?
Yes, from a low base. But this, if the pickup that we've seen in activity from the recent few months continues up until the end of the year, this will be the first increase in activity in 3 years. And this year, emerging markets investments are what is underpinning the growth in investments. Investments into India, China, some Latin American countries and African countries. And this is because these countries are viewed as having more potential for growth, which translates into better return on investments for private equity firms.
And at the same, we'll pick up on that in a second, but at the same time, what's happened to sort of funds raised as well?
Funds raised are down this year. It's difficult to... I mean, funds under management of private equity firms are at record levels. There's some $2.5 trillion under management by private equity firms. But about 60% of this is investments that they've already made. So basically exit activity is down at the moment, so they're holding on to these investments, waiting for the market conditions to improve.
Yeah, I mean, I was talking to private equity guys. Is actually anybody thinking of putting money into a private equity fund at the moment needs to ask the manager, is this going into a fresh investment, or is this just going to try and get you out from a hole on previous investments? And that seems to me a pretty important issue.
Yes, I mean that is a valid statement. I mean, about 40% of this 2.5 trillion, about 1 trillion is freely available funds that could be used for new investments or to prop up current investments. But for example, secondary market transactions for private equity firms have reached record levels this year. And these are transactions where one private equity firm is selling existing stakes to another private equity firm. So this has picked up. So private equity firms are finding funds elsewhere.
I was going to say, Marko, when you look at, say, something like 3i, which balances up the fact that it's a major private equity player, but with being listed on the stock market, so people can get in and out far more easily than if they were directly investing in a private equity fund. Do you see, with the recent rally in the markets, the superior performance of some of these quoted private equity firms because they're going to be able to exit some of their investments in public offerings as the markets have risen?
Yes, that's very possible. I mean, IPOs as an exit alternative have increased over the past year, obviously with the increase in equity markets. But exit transactions as a whole are at a 6-year low. So, I mean, basically, investors are sitting on their investments. They're waiting for the markets to improve. But as you say, I mean, these if there's an alternative to exit these funds in an easier way, I'm sure those sorts of investments will be more popular at the moment.
Marko, good to see you. Thanks very much indeed for coming. Marko Maslakovic, Senior Manager for Economic Research at the Citi UK.